There he is. It's the man.
Hey, what's up, guys?
Hey, how you doing, Mike?
Can you hear me?
It's good.
Hold on. Can you hear me?
Yes, sir.
All right, cool. How's it going?
Good to see you.
Nice to see you. Thanks for having me.
Oh, buddy, thank you so much. I really appreciate it. This is just sweet. You know, I know you're busy with a lot going on, and we're going to make it worth everybody's while, including yours.
Cool. I'm not late, am I?
No.
Okay, good deal.
No. Hey, you know what I always say? If you're not early, you're late.
There you go. Is that one of our wall charts behind you?
Yeah, check it out, buddy.
I love those. Yeah, it does, man. We spent a lot of time to get those right. Which one is that? Is that the 100-year or is the...
Yeah, 1900 to 2008.
Okay. Yeah, and that's my favorite.
This is really cool. Owen, this is Owen's, okay? Owen. He put this together and he said, hey, why don't we put this up here? I said, yeah, let's do it.
That's awesome. Yeah, we use those all the time. Yeah, so helpful.
You know, I always tell people patterns repeat. And the reason why, I'm going to take this off right now, Owen. Sound good?
Yes.
Sweet. Patterns repeat. And, you know, you think, why? Man, it's because it's just a reflection of human emotions. Fear, greed, panic, complacency. And it happens over and over again all the time.
Yeah, absolutely. You know, it was that way 100 years ago, hundreds of years ago, back if you go do the whole tulip thing, you know.
Oh, yeah.
That's the way it's going to be. I mean, we have the algos coming in, but if you think about it, there are people who are programming the algos. So, you know, in the short term, you can cut out a little bit of that noise, but it creates this other noise that you have to figure out. But yeah, it's the fear and the greed. That's what it's about.
Big time. I remember that tulip craze. That was nuts. That was
that was a little before my time, man.
I missed it by 8 years.
By 8 years. I'm digging that beard over there. That is a cool, serious beard you got going.
Thanks.
Yeah. How long you been growing that for?
Just since COVID.
Just since COVID. We'll just call you ZZ.
It's been almost 4 years probably.
Okay. Yeah, you're not messing around, man.
I do it for a comb over. I don't know. Yeah.
Hey, whatever it takes, man.
Yeah, no doubt. Let me tell you, what do we got here? 3:27. So we have time. So how's life treating you out in California?
Well, you know, I'd like things to not be shut down. I'm taking a very, very rare vacation next week, and I think all the restaurants are going to be closed. So we're gonna, you know. We'll see how it goes, but at least you know, just change of pace type of thing.
How are the kids handling it? Pretty good?
No, you know, it's kind of messed up. They're graduating, or they graduated high school, but they didn't really get to go through the graduation. It was this virtual thing, and they're both going off to college, and one of them at this point is going to be supposed to be in the dorms, but we'll see if that changes. But the other one, you know, is my daughter is out of luck. It's doing college from home. And yeah, you remember? I mean, college, that your freshman year. I mean, she's a non-drinker. She's as straight as it gets, but still, she'd have fun. You know, like that. That is the time to have fun in life. But yeah, it's a bummer.
It is. It's such a turbulent time. You know, my senior year was the best 2 years of my life. Okay.
I saw you wrote. That was funny, man.
No, it's a shame because what you said, they're missing out on stuff. I mean, it's not just the classes. It's the total package.
Yeah. It's switching, going from like the big kid on campus to the new kid on campus, and the whole dorms and that whole thing. And, you know, I feel for them, you know, just.
Was it hard?
Well, they're not gone yet. I mean, on a selfish level, I'm kind of happy because then I was able to stay home and they're here.
But yeah, I got 4 kids and they're strewn out all over the place now, and never see them. I haven't seen.
Yeah, that's a drag. That is. Where are you located? You're in the Minnesota?
I can't tell you because I'm in the witness protection program. So
okay, that happens.
It gets really quiet, don't it? There's a story that goes with it, but that's for another time. That's another time.
Okay. We'll have
Yeah, no,
some
I'm in
drink.
St. Louis.
Oh, okay.
Lived here, like you and I were messaging back and forth, lived here, lived in Colorado up in the mountains, lived in
Oh, that's
Oregon up in
right.
the
Yeah.
mountains, just kind of moved around different places and settled here with 4 kids. I got 3 grandkids.
Wow.
So, and I'm thankful because they live in St. Louis.
Oh,
So
so at
that's-
least you get that aspect.
Oh,
That's
yeah.
good. You get to do it a second time.
You bet. You bet. And so we get to play and stuff like that. So that's kind of cool, and it keeps me
Too
going.
young. Yeah.
Yeah. It's a lot of energy there. So, well, hey, let's get started because I
Sure.
don't want to take up too many people's time. But I'm Pat Walker, and I'm with Mission Winners. And I'm really pleased because we have a really special guest today. And I've struck up a friendship with Mike, I guess, for almost a year or something like this. Mike Webster is one of the senior portfolio manager at Bill O'Neill and Company, correct?
Well, I did that for 20 years. Now I'm over at IBD doing the head market strategist and running Swing Trader with my buddy and helping out with leaderboard and a bunch of other stuff.
That's great.
I keep busy.
That's awesome. I don't know if you remember, you and I messaged each other back and forth. I actually met you in Chicago at Can Slim Level 3 with Bill O'Neill.
Those were fun. Those were a
Yeah.
blast. Getting to travel around with your idol and be on stage with them was that was the time of my life. And I was forget who I was messaging with the other day, but they were flying back first class, and I said, when Bill and I would travel together, he would never do. Here he's worth a lot of money, and he wouldn't fly first class, and he would fly coach, and we'd fly typically next to each other. This one time, and it was actually back from Chicago, we were catty corner from each other, so he was in front of me and I was behind him across the aisles, and the entire flight back we were working on stock stuff, and it was a nighttime flight after the seminar. We've done the whole seminar all day. I'm exhausted, he's exhausted, but he's, go. And we're talking about revamping stuff on the paper, stuff we're doing with our trades. And I mean, it was comical because he had no sense of the people around him who were annoyed as could be. They didn't know who they were sitting next to and the great info they were getting. But those were a blast. We had, I learned so much from him, and he's so motivational and so down to earth that you just never understand what he's really been able to accomplish.
Amen. He changed. I say this all the time, and it's the honest to goodness truth. He changed my life. I mean, I remember I got in the business in '86, and you're kind of trying to figure things out. And then I'll tell you something that was cool years ago. I got to meet Martin Zweig and talk with him one-on-one. And
that must have been amazing. He was so smart.
That was really cool. He was such a humble man, and he was really pensive in his delivery. But, I followed him and his book and got the Zweig forecast back then. And, I give credit where credit's due. Because of him, my clients, all my managers, we missed the crash of '87. We were out.
He was the dude that called that.
Yes.
I think on Wall Street week, before that happened. I mean, and that guy, he was so down, with the whole Fed and how important the Fed, is. And
no, it was just, it was great. And then I'm going to make you laugh. I was down at a Can Slim seminar in Houston.
Okay.
I'm in the hotel, and I said, well, I'm going to go down to the lobby. And so I leave the hotel room. My wife's with me. I leave the hotel room, and I get on the elevator and, just push the button, and then I glance. And it was Bill O'Neill and David Ryan.
That's awesome, man.
I was like, hey, this is kind of divine. And so I turned around and I said, hey, guys, it's a pleasure. And they're both like, well, it's nice to meet you. It's nice to meet you too.
Yeah. David is, so I started at the firm in '97, and he was, he left in 1998 to do his own thing. And I had to beg to go see one of those seminars because I'd left. I was at a different firm, and I left because I'd read Bill's book, and I'm like, I need to work for this guy. Like, there is not a plan B. There never was a plan B. I'm like, I need to work for him. I need to be a PM there. And so anyway, so I got in the door in our research department, and I always wanted to talk to him, but he left beforehand. But I got to see him do a seminar with Bill,
Yeah.
and it was so inspirational. And Dave seemed like such a great, down-to-earth guy. And at the end of his presentation, he said that, the stock market isn't first, it's your family and friends. And
Yeah.
that always stuck with me, that message that he gave, and kind of came full circle this past Christmas time. We did our last level 4 out in Santa Monica, and it was a 2-day seminar that we used to do, and for I don't know, maybe 15 years or something like that, I don't know. And I had to go on stage right after him, so those are big shoes to fill. And he gave this great speech. Like, I was literally in the back crying. Like, it was his story of his his time with Bill early on. And I was lucky enough, I wanted to be the David Ryan, and I got to do that for quite some time. I mean, I used to call Bill every Sunday for 15 years, and we'd spend an hour and a half on the phone each Sunday, going through charts. I'd work all Sunday to give him the best ideas, and then we'd go through that, and got to share an office with him for 2 years. And
That's huge.
it was, oh man, it was priceless.
What an educate. Oh, here, I'm going to make you smile, okay? From
Yeah.
days gone by. I pulled this one out. I still have these.
Okay. I saw you post that. Yeah.
Check the date.
That's some great. Yeah. It's July 14th, 1989. That is some good stuff, man.
I mean, you know what was awesome? And people, I'll get people asking me like, how'd you get good with the charts? And I always tell people, when I started this, there was no internet. You know what I'm talking about. There was no internet. There was no screening. It was just, I got the blue and the green book, and every Sunday I got them mailed to me. I had to pay extra for it. There's a story that goes with that with the police, but that's a different story.
Is that why you're in witness protection? Okay.
Yeah. No, it had to do with the post office, but we're going to leave that alone right now.
Okay.
But I remember it was just such a great education because you know what I'm talking about. 4 charts per page.
Yep.
And
the paper was so thin, that
Yes.
that made it tricky. And then in the back, you had the charts that were even smaller, so the aspect ratio on it was terrible.
The Amex charts.
Yeah, the Amex charts.
That's it. That's it. But the blue and the green. And so, I'll just use this as a segue for everybody. If there's no substitute for getting on the horse, if you want to get better at riding a bike, you want to get better at swimming, you got to get out there and do it. And I'll tell you the truth. There's no substitute for looking, and I'm sure you'd agree, at looking at charts and training your eyes and mind on what to look for, and constantly look for like those common themes. You know what I mean? Is you can just, and I don't mean just the cup and a handle, but just simple chart patterns, and over you see, and it just hits you. It's like the odds of this working are higher than a crummy chart pattern.
Yeah, so with charts, I'm glad you mentioned that with the cup and handle. Of course, that's what we're known for, but because Bill started that whole thing way back when.
Sure.
But it's every chart that you look at, you should try to learn something, and it becomes subconscious. You're not saying, okay, what am I learning from this chart? But you're looking at it, and the more that you can go through, the more you'll start seeing patterns that you don't even necessarily have to have a name for. It's like if it does something, your expectation is this other thing. Now, it doesn't always work out that way, but if you do it enough, you can look at a chart and say, the key thing is acting normal or is it abnormal? If it's normal, you can roll with it. And if it's abnormal, then you're taking on risk, and you're saying, okay, well, if it's abnormal, that's Vegas time. You don't have an edge, and you're looking for an edge.
Amen.
And so the more charts you can look at, the better. And speaking of charts, one of my favorite project that I did over the years with him was, or for him really, was with a buddy of mine, Charles, who was, long-term PM there, great guy.
Charlie Harris.
Yep. Bill had started his model book stocks, and I guess probably most people know what those are, but that's a study of the biggest winners of all time, and he started building those in the late 60s, but it started from really early 60 that he was studying.
Yeah.
And then anyways, long story short, we said, you know what, I wonder if this worked before then, and we wanted to fill in the blanks. So we wanted to look back at the beginning of time, and we couldn't. The data wasn't out there, and so we searched for it, and we got this crisp data from Chicago, obviously, and it was monthly close data only. So we got charts of those, printed them up, and Chuck and I went through all of those. Took forever. Then from there, we looked at the ones that went up the most, and we said, okay, now we need to fill in this data. And we tried to buy the data. We couldn't, no one had it.
Yep.
So we actually had a team of people who went through the PDFs. So we got access to old newspapers like the Old Journal and a couple other, maybe it was the New York Times, PDFs of them, and they would sit and enter in the daily. I mean, that job sucked, but we worked with them, and we had two people doing the same thing, cross-reference and all that stuff. Make a long story short, now it comes to the reveal, and I'm scared to death going, oh my God, this guy has built this career, and I've built a career on his career of this stuff working, but no one had ever studied it prior to, really 58, kind of where, Darvis did his stuff. Yeah. And so we had gone all the way back to 1880, and it was crazy. The same stuff happened back then. Yeah. That was happening now, and the cups with handles, the double bottoms, the flat bases. Now the charts were thin, because we didn't have the type of volume like we have now, and the moves were, took a little bit longer in most cases to work themselves out. But it was amazing, and it was Tennessee coal that I always talk about from before 1900 that. There was just this beautiful cup with handle that formed, and it was just as if it happened today. So that goes back to what we were talking about at the beginning of the fear, the greed, the hope. Yeah. It's there, and that's just the way it is, man. And that's the way it's going to be.
That's awesome. Do you remember? Okay, this may even be before your time. Amex stock, 3-5 systems, TFS. Does that ring a bell?
I remember studying it. I didn't trade it. I think the funny thing with the Amex stocks is every year there would always be one or two Amex stocks that had a huge move. Yep. And, I figured that out because I had noticed that in studying them, because there would typically be OTC, Nasdaq, New York Stock Exchange. There would always be this one that would rip up. And so I had a separate screen just for Amex stocks for that one stock. And I figured out why it was. When in June of 2000, I made my first trip to New York and went on the floor of the exchange, and they had this whole. That's another story. But anyways, it went down to the New York Stock Exchange. Unbelievable, because it was still a crazy time. I was still at the height of the floor, probably as crazy as it ever had been. Besides like 1929. And then we will go over to the Amex. And it was like a dump, man. Like it felt like it was a bunch of guys like me who would be there as like a racetrack or something. And you got to imagine there was probably just a couple stocks in there that was keeping the guys, probably, a few girls back in that day, really active, and they would have these monster moves. Like sometimes the best stock from a percentage standpoint would come from the Amex, but most of the other ones were junk pile, so, so go on with that stock. I'm sorry. Do you have a chart of it that we I don't have it in this book. I have another. There was another one, Lynch Group, LGL. Okay. And they were the Amex stocks, you remember, they were so unbelievably thin. And by the way, some of you are listening going, this isn't relevant. No, actually it is. There's a moral to this story. These stocks were so unbelievable. Some of these stocks did 1,000 shares a day, and you could buy it and literally start the breakout. And they'd go up 5, 6, 7 points in and you can say, what do you mean, $100 stock? No, I'm talking a $20 stock. Go up 40%, 50% in a day. Yeah, and they were massive moves. Yeah, it was fun. The moral for me, for all of us, I hope is, and it ties in with what you're saying, is focusing on, and I know you're cutting that cloth, just simplicity. Don't, turn off the noise and all the hype, and just let the charts talk to you. And I don't even have, I'll be honest, I don't even have cable TV in my office. I just, I got music going and stuff like that.
I got a TV, but you don't need it. Don't need it.
Yeah.
There's plenty there. And then it's sensory overload, you know?
Yeah, look, I mean, I'll watch CNBC for the entertainment value because I love Kramer. I think he's just a good guy and fun to watch. And, you know, there are a couple other guys on CNBC that I you know, Josh Brown, I think he really knows his stuff, and the brothers, the Nigerian brothers. But for the most part, lots of the times the information is just wrong, like just plain wrong. And you're going, how can you, they'll talk about the volume and they'll say the volume was huge today. And you're like, no, it wasn't. It was less than yesterday, man. You know, but you know, they all mean well, I'm sure. They just look at it differently, but you know, it's entertainment.
You bet. That's it. It is what it is, you know, and it works. You know, we've gone back and forth a little bit, you know, we talk about music, but I know the people really aren't here for the music. And sometime you and I will talk about the Led Zeppelins and which was, I remember I was at a concert. It was Leonard Skinner the year before their plane crashed.
Oh, wow. A real Skinner.
It was an amazing concert, but I'll never forget. It was in this huge arena in St. Louis, wasn't at the arena, it was Kiel. And all of a sudden somebody shoots a bottle rocket off the floor of the auditorium, and it shoots straight up, and it hits the bottom of the basketball scoreboard and ricochets off of it and flies and hits me right in the chest and blows up.
You. Oh my God.
Hit me right here. I mean, I'm like, I can't tell you what.
Remind me not to stand next to you if we go to a concert, man.
I can't tell you what I said, but you can kind of guess.
Yeah.
I was drinking Schlitz malt liquor, and so that helped. But yeah, that was those were. I know you and I have talked about Jimmy Page and Led Zeppelin and Eric Clapton.
No, let's get into some stock stuff, man.
Yeah.
Do you have some charts you want to go over?
Yeah.
Or I up for any questions people have? I don't care. Whatever you want to do.
That's what I would like to do. Just kind of open it up a little bit, and just a little bit of foundation is we're very, you know, I think Mike and I, we're cut from the same cloth as far as really being stringent. A lot of people try to find a million different things. We don't have to. You don't have to. I'm going to speak for myself. All right. I'm not going to speak for you. I really focus on stocks in the leading groups, and I can quantify this. All right. I'm a quantifiable guy as far as that's my background is numbers from what I used to teach. And just looking for companies that are in leading groups that have either great earnings and or great sales and a great chart pattern that are near 52-week highs with an accumulation distribution of A or B. I like quality, you know, and a chart pattern that a sixth grader can see and understand because it increases the odds other people see it and they'll run with it. And that's kind of, you know, my shtick. What are your thoughts on that?
Well, you know, I think what you have to do is you have to find what works for you. And, you know, if that works for you, you know, I work with a guy, Ken, who likes keeping it that way, kind of just simple. And we call it a Shreve special. And it's like you said, like if a sixth grader can see it and is going through, then he's all over it. And that works for him. And that works with his personality. And so it's whatever, you know. Don't try to be like Pat. Don't try to be like Mike. Don't try to be like ZZ over there. You know, just do, that's you, Owen. Just do your own thing. You know, don't try to be, you know, Bill O'Neill. And like, so I have my style and it's a little bit more intense and it's a little, I look for the nuances and, you know, but that's fun for me. And because I look at, I mean, if I don't look at 3,000 charts in a day, you know, I haven't done my job. You know, it's more, you know, like I'm just, you know, going through tons and tons of stuff. And so with that, I'm going to see a lot of nuances, you know, and so I try to get an edge that way, but it's whatever your edge is, you know.
You got it. You got it. Let's see if we can do this here. There we go. How's that? Is that sweet? Can y'all see that?
Yeah.
Yep, sure can.
All right. We'll use, I mean, I could use MarketSmith, but I don't want to rock anybody's boats. But would you prefer I use MarketSmith? What's
yeah, could you? Because I'm a little OCD with my charts, and I won't be able to make sense of it if it isn't. I'm not trying to push those. It's
no,
just,
I actually
And in fact, I use our institutional version of it, and so sometimes the MarketSmith looks just even a little bit different than our institutional version, and it throws me a bit. And so
Oh, I
that is one thing that people should get, whether it's, I also use TradeStation for my intraday charts, and whatever system you use, you should try to set it up the same way if you're using it on multiple PCs, because there is something to be said for having, your eyes adjust to what looks wide and loose, what looks tight.
You
And if
got
you
it.
have different settings, it can really confuse you. And I even saw that with Bill with things, and he really just had a difficult time with daily charts. He was so good with weekly charts and monthly charts. The daily charts, I just don't think we ever got the scaling exactly right for him.
There you go. Yeah, I'm with you. I'll take a bigger picture of you. And this a helpful hint. What Mike's saying is tremendous, profound wisdom is looking at the daily charts, going to weekly to get bigger picture views, extremely useful, extremely. I'd be lost without him. And I'll also say this, you work for them. I don't, but I love MarketSmith. With my screens, I couldn't do this without this. And I'll show it right here. These are some of my screens.
I
Right
think
there.
you have to share that. I'm just seeing your
You still see
Ensign
Ensign.
window. Yeah, I think you have to move it over or something.
Oh, I'm sorry.
That's
There
good.
you go.
Here we
There you
go.
go.
My apologies. Thank you both.
No problem.
This is good. Yeah. Okay. So this is MarketSmith, and it's got the numbers here, and I'll show you something over here. These are my screens
Cool.
that I've developed for over 20 plus years. And, we all have our screens, and that's great. I'm not going to say my screens are better than your screens, but the two I have three that I lean on. The Bill O'Neill screen, which is his constraints, 40% earnings in the top 40 groups, average sales 40% for 2 quarters in top 40 groups. And I'll tell you what, from what I found, money flows there. That's what I'm after. So anyway, so let's look at, we'll open it up. Or Mike, is there something you'd like? Is there a chart you would like me to look at, good buddy? And I'll be glad to.
Whatever questions people have, whatever stocks they want to go over, I'm fine. Fine with. Wow, how did you get that blue background? I didn't even know that was possible.
That's a great question. And what I do is right down here, this this taskbar right here.
Oh, you're using the animation tools. Okay, gotcha.
Yeah.
Gotcha.
And
Yeah,
then I can just click this one right here and pick the color I want, which in this instance is blue. I
Cool.
found they used to have another color a couple of years ago that was easier on the eyes, but they got rid of it. But for my eyes, I just find this is white is too bright for me.
Yeah.
And this is easier on my eyes. And I like it because there's good contrast with definition of color.
Yeah, no, I actually that does look good. On our institutional version, we switched over and gave a choice between black or the white background. And for a while, I was using the black because that's what I used with TradeStation, and then it just would throw me. But this blue does look that is nice. So, but yeah, whatever stocks, if you want to go over the general market, why don't we pull up the Nasdaq and just kind of talk about where we're at?
Let's do it.
Zero NDQC.
There you are, buddy. Rock and roll.
All right. So,
Would you like
and
a
I
weekly
assume
or a daily?
no, the daily for this, and I assume that's a 21-day moving average you have on there.
21 EMA. You got it,
Good.
man.
Okay. Cool.
Love
So
it.
that is the key moving average that everyone should use, in my opinion. That's what I've used since the late 90s, and I did a study and went over a bunch of different moving averages, and it really seems to blend with our style of trading. When you're trending above, whether it's a stock or more importantly an index, above that's kind of your the gas pedal is on, to just keep it very simple. And so when you're above that, you don't want to be fighting it unless you have a massive downside reversal and or some leading stocks really breaking down. If you're above that, especially if your low is above the 21-day, your default position should be buying. Now, right now, with the action that we've had over the last week, I'm more in a neutral. I've backed way off of the gas. I've actually tapped on the brakes a bit because to me, we should be going sideways here for a little bit because we had the gap up on Monday, came down pretty hard that day, and more so than the market. A lot of the best stocks had their worst days in over a year.
Yep.
And that was just, my buddy Scott Sinclair had mentioned on a show that we do. He called it a shot across the bow, and that's what I always refer to it too. Is, hey, that's just a warning saying, hey, people are in lock in some gain mode. And it doesn't mean you go to cash. It doesn't mean you back out of the market. It means you switch gears from being aggressive. Because there are times where you have to play really hard aggressive if you want to be good, and then there's times you have to be completely in cash or almost totally in cash, like we were in the bear market in mid-Feb to March 23rd. There's a time and a place for everything, and so right now, in my opinion, especially in the middle of earnings season or the beginning of earnings season, is you got to be very cautious. You're light on your positions. Your default is if you see something you want to buy, like I was looking at Lulu and wanted to get back in that. But if I was going to buy that, I want to sell something else because I don't want to necessarily raise my cost basis or I raise my percent invested. So like this stock looks very tight. Let's go to a weekly on it. Because I'd completely missed it on the way up. I was just dead wrong, and I didn't think people were still going to be, into these, expensive, yoga pants and stuff, and I was wrong. And you can see that you had the power of all those weeks in a row up on the right side, and as it broke out of that cup without handle, now it's formed a nice little flat base here with the 10-week moving average catching up to it, which is the nice way you'd like. You don't always want the stock coming into the, coming down to bounce off the 10-week, which is fine. It's nicer if it just kind of catches up. And so the stock is getting tighter and tighter. And I think that one looks really good. But the point wasn't so much about Lulu, it was about the position where we are in the market.
Yes.
That at least my take is, hey, look, as far as the Nasdaq goes, it's saying I need a pause, I need a break. It doesn't mean it has to fall apart. It just, going sideways would be perfect.
Yeah.
So you're in second gear, if you're driving a stick, you're not pushing it right now because this is where you can get chopped up, a lot. And so there will be a time, it could be tomorrow, most likely. I hope it's not for 3 or 4 weeks, where then we press the gas down hard again. But then we'll be out of this, this earnings chop. You saw Netflix got hit after hours, and earnings are a crapshoot. These days it looks good going into earnings. It's down 9% right now, and who knows by the time the morning comes where it's going to be, or down 10%.
Look at that. It's such a. I always tell people, don't let your computer turn into a video slot machine. And let the market guide you, like you're saying. Just listen to it. Don't have an opinion. It'll tell you when to push on the accelerator, as you state, and when to back off a little bit.
Mm-hmm. Yeah, absolutely.
I read this quote. I think you've probably seen me. I posted this from Dave Landry, who's a great guy. This quote saved me in 2000. I'll believe in what I see and not in what I believe. Just let it talk to you, as you know. And what's another stock? What else would somebody like to look at?
Yeah, whatever you guys want.
Or is there one that you would like to look at, Mike? Because
No, I'm here for you guys, man. It doesn't matter to me. Whatever you guys want. Speak
Anybody?
up.
We do have some questions here if you guys want to get into some
let's do
questions.
that.
Yeah, let's go.
You want me to read it to you, or you want to find it? It's down at the chat window.
Yeah, you can read it.
Sure, go for it. Thanks, Owen.
All right. It says, as far as simplicity goes, after you've run your screens, do you look at monthly and weekly charts first, or just step back after cherry picking the dailies?
Oh, so that's a great question. So when I run my screens, There's two ways that I'll do it, and it depends on like what setup I'm using. So you can have the multiple, a daily and a weekly at the same time,
Yeah.
and that's something that I used to do for a long period of time. Is where I would, whenever I'd pull it up, I'd do a daily and a weekly, and then I kind of got back to I'll play it through with the dailies first, and as I'm looking at it, I'm just asking myself, is this stock in position that,
Mhm.
I would, if it moves, like let's go to the Netflix or let's go to Lulu, back to Lulu on a daily.
All righty.
So I would just look at it and say, okay, is this in position that if it had a big move tomorrow or the next day that I might consider buying it? And, Owen, how would you answer that?
Well, I wouldn't be ready for it just yet. I'd want it to break through that line that Pat just drew, right?
So, okay, so let me restate the question. So you're playing through your screen right now, right? And this one comes up. You ask yourself in your mind, if this stock were to break above, have a big 5% move the next day, would it be something where it's in position where you'd want to buy? And I think the answer with this one is a resounding yes, right? Because it's near that buy point versus something that is way extended or way deep down in the base. I think you had TTD up. Let's look at
Yeah.
that real quick as a contrast.
You got it. Yeah, there's no
So,
edge up here, is there?
yeah, so unless you're doing a swing trade, this is way too, really extended. So as you're going through, you're just going to the next stock. You're just hitting the space bar, moving on. Whereas with the Lulu, what I would do is, I see that you use the flag function. I would use that flag function, or what Bill would do is he would just have a little yellow notepad next to him, and he would just jot down the symbol, whatever works for you, put it in a list, but keep moving through your screens, because I like going through tons and tons of stocks, and I'll do it first on a daily because it gives you a certain view, and then I'll take out those stocks that I want to look at further. So like a Lulu in this case, I'd want to, I would flag that, and I'd have that separately. Then I'll play through the whole list on the weekly, because that gives you a completely different feel for it. And when I'm playing through it on the weekly, I'm focusing more on the fundamental information. So let's toggle over to the weekly on this one.
Sure, good.
And so you're focusing, down in the left corner of, on the earnings and sales, and the higher up box where you're looking at the annual numbers, and then you talked about the industry group, so you're looking at that box. So your eyes are going to different places as you're going through it on the weekly. So it's not just the chart, it's the fundamentals, but you have to get to the point where you're looking at it so quickly that you're not getting hung up on the stock, because I want to go through hundreds and hundreds of stocks at a time, because that's going to give you a feel for how the market is doing. So you could look at a bunch of stocks you would never think of trading. Like I don't trade utilities, for example, but there's this NEE that always keeps coming through my screen. So at some point I'm going to stop and look at that and see, okay, is that really a utility, or is it a different play? Why is it acting like that? So you want to get a sense for, are there different sectors that are moving, and that'll happen. Like the pull up the ITB, which is the home builders, and if you're going through ETFs and you see something like this, where it's this beautiful cup with handle, it's just breaking out, you say, okay, well now let me go play through all the home builders. So let's pull up Lennar, LEN, and from there you're saying, okay, well there's this massively deep cup with handle that it's a couple days out of there. Then I would play through all the rest of the stocks in that group, and I like to sort it either by dollar volume or market cap or composite rating, and I'll even look at stocks that are under $10 sometimes, and I'll never trade a stock under $10, but to get a sense, is that group moving? And you can do the same thing with the biotechs. You've got the biotech group is huge, and you've got all this movement there, and you could sort that one by relative strength in descending order, and you just hit the space bar, and you're just trying to, uncover what that next big stock is. And, I swing trade, I position trade. You can look at the stocks from, different angles, and depending on, what you're trying to get out of the market. Are you trying to just buy a stock once and then, set a stop and then move on with your life? That's perfectly fine for most people. Or if you're going to be in front of it and you like this game, then that's going to be different, and you're going to learn how to pyramid into a stock. So as it breaks out, be adding more and more. So it's really a personal thing, but the key is getting as many, in my opinion, getting as many charts in front of your eyes as possible. And just on that note, whenever you have a tough time in the market or a tough day in the market, not necessarily, you could have had a great day, but the market has a tough day. You want to go through, I like to go through the entire S&P 500 stocks, regardless of where they are, to get a sense for what happened that day. What was moving? Was the junk pile coming up and the growth stocks were coming down, or was it a mixed bag? Was it just earnings related? So it's, that's your window in, is using, whether you want to use MarketSmith or you want to use a different product, doesn't matter to me. Just use something that works for you, where you can look at a ton of stocks in a short period of time.
I think there's a valuable lesson here also. We're losing a lot of the preconceived notions. We look at what's going on politically in this country. We look at COVID-19. By the way, that's not an endorsement or a disendorsement for the parties. No. Just there's a tremendous amount of upheaval, and people saying everybody's out of work. The economy's dying. Nobody's buying anything right now. And you talk about the industry groups or the ETFs, then you sit here and you go to something like this, the retailing, the consumer's dead. Well, all I know is this, the retail index, by God, it's right at all-time highs.
So with that, I think you hit a very valuable point there. Is, look, everyone is divided, right? We all have our camps. I have my camp, you have your camp. Everyone listening, there's very few people on the fence these days. You're in one side or another, and that's sad, but that's just reality. Don't let that influence, your trading. And I got to say, people don't know this about, a lot of people don't know this about Bill, but he had as much knowledge as he had about the stock market. He had as much, if not more, politically, and about politics and how government really works. And I would remember on those Sunday night calls that whenever it was an election year, we'd spend 2/3 of the time on stocks and we'd spend the last third on politics. And I really had to know my stuff, because he would, he'd say, well, you heard about so-and-so happening. And the first time I said no, and it didn't go over well. He's like, how can you not know that? And so I learned everything, watched every Sunday show, whatever. And it just became a thing where I'm very political, but I don't want to let anyone know where I stand. So it's important to be, we're in America. We have freedom to think however you want, but don't let it influence the market, because I can tell you from watching him, he was super political, and after an election, and if it didn't go his way, the first time we were all scared to walk into the building. We're like, oh no, Bill has been just laser focused on this election for 6 months. I mean, everything got dropped before a presidential election, and then his party didn't win, and I was so scared I just didn't even want to see him. And he acted like nothing happened. He just moved on his merry way. So right now, that's very important, because we're so polarized, and everyone has their point of view. Their point of view is right, and I get that. But don't let it influence your trading. It's not going to help your trading at all. Look at reality, and let's go back to the Nasdaq and how that's relevant. Here is, the market always looks forward, and the market was able to see how this, at first, when back in February, when things were really starting to hit, we were all over the place because we'd have a big down day, we'd have a big up day, because the market didn't have a sense of playing this out. But the guys and the girls that control the real amount of money out there, they have modeled it, and they have divorced themselves from the party. And whether they're a pro-Trumper, they hate Trumps, they wear masks, they don't wear masks, what have you, that they've just modeled it, and then you could just read reality because the market has been able to go up. And you can see that they were right. Like, let's pull up Carnival Cruise, CCL or RCL for Royal. And they, that's still down in the dumps because, I'm a cruiser. I love cruising. And, I wanted to go, we had planned on going on a cruise next week when I was on vacay, and, we couldn't do it obviously because it got canceled. And so the market was able to read into this, and let's go to the weekly on these. And they were able to see that, hey, this industry isn't coming back right away.
Nope.
And let's toggle back over to LGIH, which is a home builder. And that got hit right away. The same way the other ones got hit, and it was able to bounce back because the market was able to figure out, hey, housing is still a viable industry. And pull up Thor Industries, which is something I'm trading. THO.
I love these numbers.
Oh yeah.
So
let's stop a second on that. This is Ken Shreve and Dave, I call him Hat Man, put this on a list that we have at the firm that we sell. And so I can't take credit for it, but look, they honed in and they saw that we have this acceleration in sales, 10, 27, 42, 58. Same thing with the earnings. That is really meaningful. When you see that with a stock, you want to be all over it. And in fact, back in the late 90s, when I was in our research department, before I was a PM, and I was a PM from January 13th of 2000 until the end of last year. And but in the research days, from 97 to 2000, we would, when earnings came out, they were called hot stocks if they had a potential for acceleration. And we'd actually, read the press releases, put in the earnings. And if you had acceleration in it like that, you had to fax that to Bill at his house immediately. Like if you were 10 minutes late, you got in trouble. Like he wanted to see that, and he would jump on it right away. And this goes back to a institutional client that he had from years ago. And I want to say it was 20th century, but I could be wrong, where they said that, hey, look, when you have acceleration with earnings and sales, 3/4 or more, you just buy that stock, regardless of what the chart looks like, because on balance, those stocks are going higher. And that's what he would do. And so there's more than one way of trading, and focusing on those fundamentals is a key thing that he would do. And that acceleration, the dual acceleration doesn't happen very often. When it does, the odds are that stock is going to be moving higher. Now, it doesn't mean you're not going to get shaken out along the way. But I'm sorry, I got off on a tangent. But the point was the market is able to figure this stuff out for you.
You bet. These numbers, they're just sweet potato pie. I love it. I love it. Getting after it. That's what I always say. There's people in here that know that.
I've noticed from Twitter.
You like that?
Dude, I love it. I actually looked it up. I'm like, is that from a song that I just didn't know? But I guess you just dig sweet potato pie. It's
stuck up here someplace.
That works for me, man.
With a lot of things. What other stock? Is there another stock that somebody would like to go through? Anything at all?
Well, let's just take the questions in order. How about that? Because the next one's pretty good. Looking at the Nasdaq, support is at the 21 EMA, and it continues to test the 21. Is this a show of strength, or could it be that after numerous tests, it'll eventually break through to the bottoms, to the downside?
Well, I guarantee you it'll eventually break through to the downside, but these things can go on a lot longer than you think. And it is becoming a bit obvious now. But sometimes things aren't as obvious to people as they are to us, because we're honed in on it and we're looking at the 21 day and we're saying, hey, it's getting, they might just say, oh, when it comes down and it's bouncing off of, excuse me, of support. But this one looks different than the other ones, because the downside reversal that we had on Monday was more dramatic than the other ones that we had. If you look at when we fell down to 94.03, that was a gap down versus being up at new high ground and then coming in. So it looks a bit more dramatic. On the flip side, you have the S&P 500 that is, if you can pull that up, is breaking out of a cup with handle. So it could just be this rotation that we're going, where the Microsoft, Apples, Amazons, Netflix, and so forth are going to take a time out, or maybe just move up at a slower pace, whereas the S&P 500 moves differently. And you know what? Can you change your setting, because it's going to drive me crazy? Go up into your settings in there. I think it's your toolbar or your wrench. Is it your wrench? Yeah. Go down to price scale, where it says standard, and click there. Oh, thank you. So never, ever, ever, under any circumstances, go back and do it the other way, because it stretches out your charts.
There you go.
And what will happen is it'll make, and Bill spent a ton of time making the way the charts are laid out look right where they're comparable. So if you pull up let's pull up a slow pokey stock like a Johnson & Johnson, for example. It should give you that type of feel versus, let's pull up, what is that? Not Tesla, but the junky car one, the nickel.
Is it NIO?
Oh, yeah, pull up NIO. Pull up NIO. I was thinking about the 4-letter one. Now go to the weekly on it. So this should look stretched out versus, you don't want to see a Johnson & Johnson stretched out, because it's, when you go through the weeklies, and this only impacts the weeklies, it doesn't impact the dailies. You want to have this sense of, are you playing with fire, or are you playing with something that's slow and pokey? Like, let's pull up Eli Lilly, which is a stock I like, LLY. And you want to have stocks like this in your account that are balancing, that's a solid, fundamental stock that trades tighter, because you don't want a bunch of heat in your account that you want to be able to handle the volatility.
Nice numbers.
Yep.
Accelerating growth right there on earnings and sales.
Yep.
Steady. There you go. I like that.
To answer the person's question, yes, when something becomes a little bit too obvious, you are concerned about it, but we don't have to do it now, but go back and study 1980, 1981. In fact, let's do it now. Pull up the Nasdaq real quick.
Okay. Where would you like to go to?
Just go out to 1980. And the current date is fine. And let's go to a daily.
Okay. I love this program, man. It's sweet, ain't it?
Yeah. So here, we had this recovery from about a 25% deep bear market that was pretty similar to what we went through, just not as dramatic. But if you really study that day by day, it was really bad. And then at this point, you're going up and saying, wow, you can't stay above that 21 day for this long. So let's go out to December of that year.
All right. I'm just going to
go out to 81. Doesn't matter.
And I'll switch back to daily. Sound good?
Yeah.
There we go. Look at that.
You can see it just kept going and going. And so these things can happen a lot longer than you would think. Now, eventually, that ran into trouble. And then, fast forward and you had 1982 and the end of 1982 and you had that big move. But everyone should be, whether you're using Market Smith or any other program, you want to make sure it just has change date feature. So you're going back and studying history. And that's what Bill would have us do all the time. Because you're always looking for precedences. has this happened before? And if so, how did it play out? They're not going to mirror themselves exactly, and you need to divorce yourself from a precedent when it stops working. You don't want to plant your flag down and say, oh, in 1980 it just kept going as we're falling apart. So that's a very important aspect. And go out to 1983 to show what I was talking about. So you have to be on your toes, because at the bottom there, you had your 3 waves down. You hit 170, you hit 167, you had hit 158. And that happens a lot in the market where you have, and it kind of goes back to the person's point of the Nasdaq hitting the 21. Sometimes it becomes so obvious that then all of a sudden things change. So we had 1 wave, 2 waves, and then 3rd wave. And every time people are like, oh, I know what's going to happen this time. It's going to fade as it comes up, but it doesn't. So you have the shorts that are getting squeezed, and then you have that rocket ship. And of course, you Reagan tax cuts and everything else that happened during that time frame. And, that was the beginning of that 1982 to 2000 major bull market.
Yeah. It's interesting. You bring up a very valuable point, and a valuable lesson is, don't develop a lot of preconceived notions. Let the charts talk to you, price and volume, and it will help guide you as you're stating. Just stick with it.
Yep. So what other questions did you have? Or
all right, the next one is understand the majority of patterns with IBD or breakouts, cup and handle pattern, flat base, W pattern, etc. What are your thoughts on pullback setups?
Oh, I love them. We in lots of times we're buying way before. I developed this thing in there that is our pattern rec, and that took a long time. And what so it'll draw the cup with handle out for you, and people think that you have to wait for the high of the handle to buy. And then lots of times it'll go through there and then just pull right back, and they're like, oh, this stuff doesn't work. No, you're looking in that handle for alternative pivot points. And Bill would use this. I use it. You see it, their downtrends or their prior resistance, are their upside reversals. So if you're in a handle area and you have a shakeout below the lows of the handle, and you close up at your highs for that day, well, that's your entry point, right? And because now you have an expectation that you have this beautiful cup with handle. Just picture in your mind, you have a beautiful cup and handle. The handle's been drifting down. It has one shakeout, big move down. Now it's closing back at the highs. You're buying that stock. You don't have to wait for it to go over the high of the handle. Now you're buying it there, and now you have a stop that is more relevant than just a 7% number. That's more of a risk management number than anything else. You have that line in the sand, which is the low of that day, and you're trading off of that. And if it goes up higher from there, you're adding to it. You're always adding to your winners. And so don't look at a pattern in MarketSmith or in anything and just say, oh, I have to wait for that high. Sometimes we were looking at ISRG, if we can pull that up. Sometimes they don't have alternative entries. So this one, and do you have pattern rec capability on here?
No, I don't.
Okay.
I don't.
That's fine. That's fine. So there was this cup with handle, and you would see that the 60121 would be your whether it was looked at as a flat base or a cup with handle, that would be your entry point. Well, exactly what you did. You can draw that declining tops line there, and even 2 days ago, when you had that upside reversal in there, it didn't necessarily come all the way down to the bottom of the base, but it came down close to your 50-day and closed up at the highs. So if you're an aggressive trader, you can make a stand there, start buying it. If it goes below the low of that day, that's your exit point. But then if it did what it did yesterday, you can add to that position at that point. So you're not putting all your chips out at once and you're looking for these places within bases that are logical areas that you have a stop that you can use. So I hope that makes sense.
I'm gonna slide this back just a couple of days.
There you go.
I think sometimes people have a perceptual filter. They always see stuff after the fact, and it's like tied in with what you're saying, Mike. You're spot on. You look at this and go, it fell down, and then it reverses, and on a volume pickup, people talk with their mouths and vote with their pocketbooks. Going into that close, they were voting.
Yeah. Well, be careful with volume. Like I told you at the beginning that, Charles and I did that study going back to 1880, and, volume always used to work, but something funky is happening with volume, and I don't know exactly when it changed, and I don't know if it's a function of ETFs, high frequency trading, more people doing options, weekly options, basically other ways for if you're bullish on ISRG in the past, you would see this huge volume spike in there, and Bill had all of his different colorful ways of saying that, that's not your Aunt Betsy buying that. We would focus on that volume rate, which is you see the little red line along the bottom, that's your average volume for your last 50 days. And we were, very, very careful with that we want to see it over 40, 50% above average on a breakout. But, these days things are a bit distorted. And I think that if you want to get a position in ISRG, I think more people are going to the options market, more people, maybe they're in dark pools or something else is happening. And I just don't have the time to study it, but I don't put the weight into volume that I used to, just because there is this disconnect. And so you have to lean more on price than you
good points. Yeah,
than you used to.
What's another question, Owen? We got a good one.
Yeah, let's talk about sector rotation. Can you go through how to analyze industry groups and sector rotation? Is there a daily or weekly routine that you go through where you can see big money, where the big money is flowing?
Without a doubt, yeah. So I'm a screen junkie. I developed this thing called a Growth 250, which is what used to be 30 screens. I recently, a couple months ago, or maybe a month ago, I added 3 new screens to it. So there's about 33 screens that goes into this one list that we have. You don't need that. I mean, I did the work for you. You can certainly use that. I use it, but you can run your own screens. And, Pat, you showed the screens you have. I'm creating new screens all the time. I share them on Twitter. Feel free to use those. For what the person is after, do a broad-based screen. So I would use something like the stocks are above $10, above $20 million volume. Something is just as basic as that, and then put price percent change in there. Sorted by price percent change. And then I don't use our 197 industry group stuff as much as I used to. I use the IBD 33, which was a Bill idea that he had because he was seeing some problems with the 197 where they were a bit too specific. Like if you get into the groups and you see like they're broken up in maybe there's a leader in one part of the chip area, so that industry group rank is way up there, but there's the chips in general are good. So but there's one that you miss. So he would use the broad 33, which is, we take the 197, we put them into these different buckets. We don't necessarily have a rating on those, but I'll just sort them, in alphabetical, and then I'll use the price percent change from there, and I'll see what was moving. And it's as simple as that. Is if you're screening through and you just have to do the work, you can go through it, or you can just look at the list, download it in Excel if you want, or do funky stuff with it. But I find it just easier to just look at the charts and say, okay, boy, Royal Caribbean and CCL were up 15% today. Wow, that's a big move. Then you look at the chart and go, oh, it's just a bounce off the bottom. It's just junk coming up off the bottom versus, they're, like the Camping World up 10, 15%. Well, that's different. It's already recovered and it's moving higher. So all the RV stocks are still moving. So there's no easy way that I know of to do it right. There are lots of ways you could do it with how we lay out our industry groups. I think there's flaws in there, because what happens if you understand how the industry group stuff works, the ratings are based off of a price weighted. So if you're in a small industry group and there's one or two stocks that have a really high price per share, those are going to be skewed. And so that's why I just like looking at the IBD 33 and just going through them. It's tricky with industry group rotation because many times it's just a pause for 2 or 3 days. And we saw that a lot with the software stocks. They'd sell off for 2 or 3 days. You would have these other groups kind of come on and look good. You don't want to bail on all of your software stocks, because the other ones, that's just a natural flow of things where they sell off for a few days. People are taking some profits. It's also where you can see which ones are strong. And I do that by looking at the closing range, where the bar is closing within the range. You can sort off of that both daily and weekly. Weekly is always more important than the daily, and so that can give you a sense too. And so I will put closing range as a data item in your screen, and you can see, okay, what are the ones that have a high weekly closing range, meaning they've closed the week near the highs of the week. What's the dominant group that you're seeing there? Is it the software and our oil and gas at the bottom, or vice versa? I hope that makes sense.
Yeah, it's good. That's great work. I like that. You should do this for a living. I just want to lay that out there. Just go pro.
Well, just don't have me be concise and I'll be okay.
You're great, man. You're good in my book. I love it. I love it. Another question? Do we have time? How are we for time? I don't want to take too much of your time, Michael.
I'm fine right now, so I'm happy to help. I've already seen my vacation. It's starting tomorrow night. When I'm done with this, I write a little piece for the paper, and when I'm done with that, I'm checked out for a week, so I'm good to go.
Good.
If anyone has some questions, I'm happy.
You're great. Hey, have a good vacation too, by the way, buddy.
Oh, thanks, man.
Good to get away, just to recharge.
Yep.
Got to do it.
Any last ones?
Yeah, so Phil wants to know about scans for swing trades. You can imagine that 3 or 6 month RS is more important than fundamentals and chart patterns. And are we also looking for more reversal type plays, or just really short bases, or both?
Those are all relevant questions and asked the right way. So I do this thing for the paper called Swing Trader. It's a ton of fun. I take it very seriously, and a lot of the scans on there they're different. I'm looking for different aspects depending on what the market is doing. So right now, Justin and I, who I've worked with him since 1998. He was Bill's right-hand man for a long time, one of the nicest guys you'll ever meet. And what we'll do is go through, and right now we're doing more ETFs because what's going on with the market is we're in this kind of pause time frame. So we're focused on reducing our risk, but we still want exposure. So we're going into ETFs. As soon as we get the go ahead to start moving into individual stocks again, then I use the 3-month RS a lot. That's something I developed way back when it was really after 99, where I was seeing things like Qualcomm, who had a huge move in 1999, and it was off 50% off its high, and it still had a rating of 99. And I said, well, that's not helpful. How could this stock have a rating of 99? But Bill's original relative strength rating was or is a 12-month time frame, and it double weights the most recent. And so when a stock has had a huge move, it can be 70% off its highs and still up way more than anything else in the market. So I developed this thing called a 3-month RS and a 6-month RS, and they kind of have an exponential component in them where the most recent day is weighted more than the day before and so on. So that's a 1 to 99 rating, and typically I'll use 70% as my threshold for both of those. The higher the better. Now the problem is if you get a 3-month RS that's at a 95 or higher, what ends up happening is those stocks are really extended, but that's kind of your best merchandise. So then to his other question of the upside reversals, then you're looking for those really high 3-month RS stocks. And in a normal environment, a 6-month RS, but those are kind of skewed because of the bear market that we had, that then you're looking for them coming down, having a pullback, and then moving back up. And if you look at stocks, you'll see that they each have their own rhythm, where sometimes, an 8% pullback is normal for one stock, whereas that could be devastating for another stock. Or 8% could be nothing for another stock. It has to come down 12%. So there isn't a set percent off high that you can use universally, but you can use moving averages. You want the stock to be above its 21 day. Once it starts falling below the 21 day, then you're into, more of a risky position that it's going to move into, building a base. And so a pullback down to the 21 day with an upside reversal is like a cookie cutter, nice swing trade. The other thing is just going over the highs of a few prior days. That's another good swing trade too. And swing trading is fun because you can kind of get your, the activity that you want out while you're sitting with your favorite stocks that you're not swing trading.
Yeah.
So I'd suggest that if you're in front of the PC all day anyways, take a portion of your account, and I'm not saying day trade, but swing trade, meaning you're trying to trade it for, several days, several weeks.
Mm-hmm.
And the other portion, you're doing more orthodox.
Excellent. Excellent. Do we have another one, Owen?
Sure.
We're on a roll here, man. By the way, we're staying for dinner, Mike. Thanks so much. This is going to be great.
Have dinner catered
After
in?
this, I'm going out. Actually, it's my mother's 74th birthday, so they're out doing stuff. And when they're done, we're going out and celebrating.
That's
that.
great.
So,
Happy
yeah.
birthday to your mom. That's awesome.
I will tell her that.
Amen. That's sweet, bud. Enjoy.
Oh, let's
So
take
what
a look
other
at some
questions
stats.
do we have? Because I still do have time.
All right.
Let's take a look at DraftKings.
Okay.
What is the ticker symbol on that?
DKNG.
Mm-hmm.
Thank you. Got it.
So look, you can see that this one had, a different personality when it was above its 21 day. That green line, or not the green line, the pinkish purplish line there. Then once it broke, it changed and it was more in a defensive standpoint. So now you had your 3 days up. So it's getting its support in everything. You can see that the RS rating is 98, even though it's way off its highs, because it's looking back over the last year. So with this one, if you wanted to trade it, it was probably earlier today as it was going through the 50. It feels a little bit extended from a short-term trade. It's not your pullback to your 50-day. It's not a bounce off the 50-day. This is more the bottom of a base is what it looks like, because what had happened is it on its run up that it held its 10-day most of the way, which I don't use the 10-day anymore, but since it's on the chart, that's a green line, went up to 44.70. And then it formed what looked like kind of a high tide flag type of formation, and it failed when it went through at 43.75 and got turned away. And that was your first warning sign that there was a problem. Then a couple days later, then you cracked your 21 day. So if you had been in it from that cup with handle and bought it at 1950 or thereabouts, that's where you would want to exit that position and lock it in. So this is a riskier type of trade. You could look at this as a shakeout plus 3 type of trade, which is how Bill would look at a Jesse Livermore. And if you guys don't know Jesse Livermore, get to know him. He's, everything started with him. It's like if we were going to talk music, we go, he's the Robert Johnson of trading. It's kind of like the Robert Johnson plus BB plus Buddy plus Jimmy. But anyways, enough, because I'll get distracted. So Shakeout plus 3 is a Jesse Livermore thing that when you're forming a base, if you fall out of that base and then you come up plus 3 points, that you can buy it. So let's say at 44.70, that was your left side of your base, and you're coming down and you stopped at your, you could say you either stopped right at your 50-day, that first time that you hit the 50-day, or you could say you came, a couple days later when it came down, and then you penetrated through that 4 days ago through the lows of your base, which you'd call it maybe 30. Move over to your left 3 days, one more day there. Okay, so your low is 30.45. Okay, so we're going to add 3 points onto that. So 33.45 would be your entry point if you came back through there. So that's where you could have been entering that as a shakeout plus 3, which is something that the Bill would use when he was really liked a stock and wanted almost an excuse, a way to get into it. We would use the shakeout plus 3. So if you really like it and you know the story behind it and you find that it's compelling, then that's how you could trade that one.
Great.
All right, next up is Wingstop. WING.
Okay. So let's go to the weekly on this one, because this is probably one of the best restaurant stocks out there. And it's funny how it completely fell apart. If this were any time other than this market crash that we dealt with, and you had a chart like this, you wouldn't even consider trading it because you don't want something to fall apart like that. But we make those exceptions now for this time frame. And look at the weeks on the move up, each week closing near the highs. And the only one that didn't, it closed tight there. So if you go your second blue week off the bottom, right there, so it closed tight. It doesn't have to close 3 weeks tight for it to be meaningful. So you have the support week at the bottom, which, so that closed well off your lows. So that at a mid-range to high closing range, that's actually supporting action. Then you had power all the way through up there. So this is its second test right now of its 10-week moving average. So that looks good. Let's move over to the daily chart. All right, so what I don't like about it is the last 3 days give you this little wedgy feeling. And what I mean by that is even though we close at the highs, each low was higher than the prior low. So you kind of had your bad break 4 days ago. That's fine. Stocks do that. And then you just inched up without shaking below the lows of the prior day. That type of position is fine in an uptrend. So if you go to that April timeframe and you see that it was inching up without really undercutting the lows of the prior day, up there a little bit further, up in there. A lot of those days were inching up without closing below the lows of the prior day. That's fine. That's in a different position. Right now, you're kind of in a weaker position where you tried to break out, couldn't hold it up at 146.13. It was coming down. You had that bad break. Now a little wedge. So I wouldn't buy this now. If you're in it and you still have a gain in it, you could use the lows from 3 days ago as your line in the sand. I like this stock. I want to get back in it. I probably wouldn't consider it until it gets back above the high from 4 days ago, the downside reversal at the earliest, if that helps.
Oops. Take a look at THO.
Okay.
Or
T8. There we go.
Yeah. So I think you wanted to go with Winnebago, it looked like. So look, this is, pull up the Camping World first, the CWH, because that's the leader in, in price action. And it's super powerful move, right? But it's extended. So now you look at the two other ones in the space, which is Winnebago, the WGO, or the Thor. So we can go to both. And so this one has this nice, declining tops line that you can draw from the 72.65, and if it goes back above that, you could certainly enter it there, or you could have bought it 2 days ago, up as it was moving up through the 50-day, or 3 days ago, I should say, on the day before. Now let's look at Thor. I do have a small position in this one. And you want to know the different products too, because that helps it keeps things interesting. And so this has the Airstream. You can think of the classic millennials. That's a space for the RVs where it seems like it's the cool thing to have. Even though I'm an old fogey, I'd still like to have an Airstream. When I have the time for it. And so these aren't just symbols. These, represent something. Wingstop, people love going there. I mean, I'm a vegetarian, so I don't go there, but I ask people, do you like that experience? And so I guess they've done a good job with the whole COVID and contact ordering and all that stuff, contactless. So this one pulled back into the 50-day, didn't quite get all the way down there. Just shook out below 100 and now has moved up. And so you can draw the declining tops line from the 1889 on down. So you can tell that right now it's more of a leader than the Winnebago because it was able to break out first. So I wouldn't build a big position in this. And right now I'm just looking at it as kind of a swing trade. And you can see that there's more power in this than the Wingstop, where it's just not just inching up for the last 3 days. You actually have that little bit of a gap in there.
Excellent. Excellent. You're good, Mike. I appreciate all your time on this. You're helping us, sir. Thank you.
Sure. Any other questions?
Hey, want to take a look at Veeva Systems?
Sure.
What is it again?
Veeva, V-E-E-V.
Oh, very good. Thank you.
Is it me, or when you see this, do you think of, what do you think of, guys? Veeva. Don't make me sing, man. Don't make me
Vegas,
sing.
baby.
Okay, yeah. I don't know why. I always think of that one. Look, this one is so slow and steady. I'm sorry. It's getting late. I hear you. Okay, so let's go to the weekly. So with this one, this is got quality numbers on it. So you treat this one a little differently, and look at the numbers in the quarterly block over there. I mean, those are solid and steady. If you look at the earnings growth rate at 43 with an earnings stability of 5, so this is in our what we call a long-term leader type of position where you have a huge growth rate with a very stable. So with the earnings stability, the lower the better. And yeah, as you're pointing out, all the ratings are just top notch. And the only thing that I would say is a little bit weak are the estimates at 16 and 18%. But relative to what things are doing these days, having a 16% rate estimate for 2021 is really, really good. Lots of great companies have negative estimates. Now, from the chart pattern, it's just way the heck out of there, man. It's just, you had all that power coming out of that base. It's way up there. You prefer for this one to form a base before you trade it from a position standpoint, just because when a stock is run for that long, it needs to form something, hopefully a little flat base, because I'm not in it and I want a position. And this is a monster. And on the daily basis, I wouldn't swing trade it because over the last few days, last week, this looks like one of those stocks where people are just taking chips off the table from it, right? They've had this huge run. They're saying, I'm going to move into this S&P junk right now and do this mean reversion trade, and I'm going to take some of my Veeva and some of my Shopify and some of my Zscaler and all, you know, Fastly and all the great stocks out there. And I'm going to move it over here to try to make some money because these are risky and look like they could come into their 50-day. So if you own it, I'd find some lines in the sand. What I would do with this one, if you have a good cost basis, which would be, you know, in the 170 range or even at the $200 range, I would use the 10-week moving average and I would wait for a decisive break of that because this is a monster and you don't want to dislodge. This is what I would call an A to A plus caliber stock that I don't own and it's killing me. Do you guys own it?
I think we do.
How many
Don't we
people
own
own it? I can see some of you. Raise your hand. Marty, do you own it?
It was
No?
on the key list.
No? Come on. Why don't you own that? Okay, so what other questions do we have?
Let's take a look at LVGO.
Okay.
Livongo.
Yeah, so I do have that one. It's one of my favorite stocks. And that's a monster, but it's super, super risky. So it's going through this digestive phase right now where it's got to go back and forth. So you don't want to touch it if you don't own it at this point, right? So you want to just sit with it, try to hold it, use that 21-day as your guide. But realize that there's downside risk on this one. Let's go out to the weekly. So yeah, I mean, that's just this powerful, I call it a high tide flag. If you look at the double bottom that we had, that it broke out around 30, you ran up, you know, and really quickly, and then you formed a high tide flag around 60, and then you broke out of that. And it's just been a monster ever since. Now that it's at the $100 area, that does become important psychologically to kind of hold in that space. So you know, if you own it, I'd hold on for dear life. What I'm doing is I'm selling off other stocks to try to manage the risk with this one because it could come down quite a bit before it's really done anything wrong. And the sales growth is really the key on this. You know, seeing sales growth with real numbers in the, you know, over the 100%, that's a monster type of move.
You know what I love too? It's not just, and you know, not just percentages, but sequential, 41, 47, 50, 69, holy Toledo, acceleration.
Yep.
I call that sweet potato pie.
I bet you do, man.
Amgen.
There we go.
Okay, so this is a great stock. This is a, you know, excuse me, this is not the Livongo, so you're not carrying that type of risk. Whenever you're in the biotech space, you can always have gap downs, but when it's a mature company like this, you know, you're kind of playing in a different category. You want to have stocks like this in your account, broke out of that beautiful cup with handle, has done everything right. We tried it on Swing Trader. We had to get rid of it just because for general market reasons, but you had that nice upside reversal off of the 21-day. You know, you could have been buying it today, you know, because it's going over the highs of the last couple of days. So that's in position to be bought if you want to, you know, increase your exposure here.
Perfect.
Take a look at KL, Kirkland.
I really appreciate your time on all this, Michael.
Hey, I'm happy to help. Like, if anyone wants to listen to this old dude, then, you know, I'm happy to be heard.
You're just a young buck, man. Let me tell you.
Oh, dude, yeah, I'm feeling it. So don't give me your relative strength thing that, you know, that because I'm younger than you, I've heard that, you know, from, you know, I'm feeling my freaking age. So look, let's look at the weekly. And you stay away from the stock because of that gap down that it had. I know people who love the story and everything, but when you have a major gap down like that in a stock right there, you just move on to a different merchandise because when it happened once, it can happen again. And so you either play the GDX, the GDXJ, which are the ETFs for this area,
Yeah.
or you play through this whole group and they're all set up. If you want to play the silver ones, you play the PAAS or even the SLV. So I think this is a good space to be in. But if there's a stock that's either too thin or there's any negative news around it, or it had that action like the KL where it completely changed character, because KL was the gold miner until that time. I mean, it was the best looking one. That just changed its personality. It's trying to prove itself again. Let someone else ride along while it's proven itself. That's just how I would play it. But look, it's a monster. I mean, you look at the sales numbers. I'm sure if you really know the story inside and out, you're probably completely disagreeing with me, and I wish you the best of luck. But I just, on balance, once you have a major gap down, look elsewhere.
Yep. There's wisdom there.
How about GW Pharmaceuticals, GWPH?
Sure. And I'm happy to go over as many stocks as you guys want, but if anyone has any questions, like burning questions that they have too, I'm happy to do that. So
what I'm doing is I'm just taking these as they came through. So
as I can, that's fine. So with this one, this was the play off of the biotech play off of the cannabis, right? Wasn't this the one that was in that space?
GWPH, ACB was another one, CGC.
Yeah, so let's go to the weekly, because there was that craze there when Tilray was going and all of those, and then it kind of fell out of favor for a while. And what's good about someone bringing this up now is it's proving itself. You never want to touch it when it's underneath that black line, the 40-week. Let it prove itself. It's formed this little consolidation, flat base-ish type of thing, which is a base on top of that last cup with handle, or just cup without handle. So I think it's an interesting position. I remember trading it back during that time frame because they were, I just forget the specifics about it, but it was something with the I don't remember it, but I remember it seemed like it was really compelling and it was going to move, but it didn't move, and instead you had the CGC and the Tilray's moving big. But let's go to the daily to get a sense of it. Yeah, what's nice is it's gone counter to what the market's done, right, over the last couple of days. As the market was getting hit, this was moving up, and it looks okay. I think I'd want to know more about, is there something in the pipeline that is going to be this risk element in the near future, so you don't walk in and just have a massive gap down on you. But the stock is not doing anything wrong. That when it tried to break out and had that bad closing range 4 days ago, that was your first concern, but it proved itself the next day, taking out those highs. We've had 2 tight days. So if you're in it, I wouldn't sell it, and I would use the low from 3 days ago as your exit. And that's what the point about these charts, and why I was wanting to get into some of the questions, was it's not about what to do with the particular chart. It's more the concepts. Always know your exit. If you're in a stock, know where your exit is. And it could be multiple places. With this, you could use the low of today to sell 10% of your position, the low from 2 days ago to sell 15%, the low from the day before to sell another 10 or 20%, and then sell the balance at the 50-day. So you can scale out, and especially now that commissions are free, you can scale out in the smallest increments as you want.
Excellent.
Let's take a look at Tyler Tech, TYL.
Thank you.
So this is one that keeps on coming through our screens from a long-term leader standpoint. It's got this weird shaped cup with handle, where this handle right now is too low in that formation. So I'd let it move back above that. Yeah, if it moves above that, you can do it as a swing trade, but you don't want to do it as a position trade. Exactly. Let it get up a little bit higher. But from a fundamental standpoint, this keeps making it through our screens.
Want to go on to the next one?
Mm-hmm.
Sure.
FSLY.
Tricky one. So wow, I think this is going to be still going to be a monster stock, but at this point it's testing its 21 day. If you're not in it, I wouldn't buy it. I still have a position, not a big position in it. I don't like how it broke down so hard 4 days ago. It should have gotten a little bit more support. 3 days ago, it had the nice close in the upper part of the range, and it's getting tighter over the last couple days. So you really wanted to take out yesterday's high before you would consider buying it. But really, the high around 90 from like 3 weeks ago, that's really where you want to be back into the stock. So let it prove itself, because it could form a base and come down to the 50-day. Let's go out to the weekly. I mean, this is such a monster and so powerful that it's completely entitled to come into that 10-week line. Now, if you have it at a low cost basis, like 26 or so, you're letting this one ride at this point, and you just know that, hey, look, I'm going to wait for that 10-week line to be broken. That's at 62. It's at 78 right now. I'm risking this much capital, and so then you might have to sell a different stock if you want to ride this one out. But if you have a high cost basis, you can't really, excuse me, do that.
Hey, Mike, what are the top 3 things you look at before buying a stock? Is it volume, price, or favorite pattern?
Oh God, that's a great question. Not volume anymore. God, it's not just 3. So first, it's got to be in the right space, right? And the group in the sector is very, very relevant. And do I want more in that space? You know, am I up to my eyeballs in software stocks? If so, and I'm buying another one, what am I going to sell off to manage my risk there? Because that's one thing that people should always think of is your industry diversification. Because when you get hit hard, you know, it doesn't matter how good your stocks are. If you're all in software stocks right now and you haven't sold anything, you're having a heck of a week, man. I mean, this is bad stuff. So it'll be a reminder, don't do that next time. I've had that happen to me where, you know, I was in all these different industry groups and thought that I was diversified. Well, no, they were all just tech-related industry, and they were all the same type of stocks. And when they come for them, they come for all of them at the same time, right? And so you want to be spread out. So that's a very important aspect of it. And then it would be the price, and also when are the earnings coming around? You know, if the earnings are in 3 days, that better be, you know, a perfect stock to buy, and especially right now, well, it's earnings season. So, but volume, not so much, but I'm very price sensitive, and I want to see the stock acting the way it should. And the more charts you look at, the more you'll get that sense like, hey, it's acting right or it's not.
Here's a good one to take a look at with everything that's going on today. Take a look at Zillow. Z.
Yeah, this one I was looking at it earlier today to possibly buy. I like how it came off the 50-day. Now this is a highly volatile stock, and so that's another thing you'd be looking at and saying, okay, is this, you know, do I have too many crazy stocks in my account or not? And it is in a little bit of a weak position in that it failed out of that little mini double bottom, you know, 65.75 on down, hit the 54.31, try to get it up in a new high ground. We put it on our swing trader product and got shaken out of it there. And now it's finding support at the 50-day. But, you know, I think it looks good. And, you know, if it tomorrow, if it took out today's highs or took out the highs from the downside reversal from 4 days ago, you know, that's where I would be, you know, entering that.
Yo.
Asking about Lulu again. Why are you interested in buying it here? Understands the price pattern is good, but isn't the recent volume and the poor earnings a red flag?
valid about the earnings, right? Typically, bills can slam as, current earnings, annual earnings, all that good stuff. And it's very, very important. But we're in the middle of this unprecedented time where the government had to shut down, or the government shut down the economy. And so it creates these ripple effects. And if you're, trying to sell, $80, I imagine they're more than that. I'm so cheap. I think 80 is a lot for a pair of pants. It's probably $120 for a pair of their pants. So if you're trying to sell that for people to sit at home, and not show that off, that, it's going to hurt your earnings temporarily. But now, as people are kind of getting back into things, the market is telling you that this was a one-time occurrence, just much like, you're in a beach town and, a hurricane comes through, you wouldn't look at the receipts from from the local restaurants and stuff and think that that's the way it's going to be forever. It's a one-time event that comes through, and then the water will go back out and things will get back to normal. And that's, at least for this stock, how the market's looking at it, because look how tight this base is up here from 324 to 284 after that huge move. Now, it's not a high tide flag, but it's in that vein of having that huge move up and not giving that back. And the upside reversal from a couple days ago was really powerful because it made it back through a round number at 300, the old Livermore thing. That's meaningful. And this is at the top of my shopping list. I'll probably wait for it to get through the highs of the downside reversal of 4 days ago, like most other ones.
At the risk of getting Mike into trouble, are there any CanSlim rules that you break or rules that you bend? For example, buying stocks with no earnings but great sales.
All the time. Look, you got to look at reality. There was a time where I traded orthodox, like very orthodox, and so let's look back at 1999. I wasn't working with Bill yet. I just had a couple meetings with him, and I'd read his book in the red cover version, How to Make Money in Stocks, the second edition, and on that the S in CanSlim was, small capitalization, and in that book it had what the number of shares should be outstanding and what the float should be. And so I ran all my custom screens for that. And for 1999, I wouldn't trade Cisco, Qualcomm, Microsoft, you name it, all the big ones. I was trading all the small ones because I was trying to be orthodox. Well, fast forward to, I'm working with him come January and I'm giving him names and he's wanting other bigger names. And I didn't realize that he had switched and he had moved with the market, and he realized that, yeah, small cap stocks are great, but there was so much money in the market that it had moved to big cap. And he was trading AOL and Schwab and these big liquid names. He didn't want the thin ones that, the thin goodies that I was trading. So I realized orthodoxy is great, but look at reality, because that's as orthodox as you can get, because he would just study reality and say, okay, what is really working in the market? And if you study what's been working in the market for the last couple of years, it's gravitated in some industry groups to sales growth. So the C and the A in CanSlim, current earnings, annual earnings, they aren't there, but the sales growth is there, and it's consistent and it's heavy, 30, 40, 50, 100%. Pull up SE. I think this is the perfect example for this, and go to the weekly. And this has been a monster stock. And let's go to the weekly so we can see the sales growth. The 137 down to 103, but then you look over on the left side of the chart up in the top corner, and there's no earnings, and there's no earnings in sight. And this is a monster stock. So I look at it as this is reality of what's really working. And so I'm going to switch there. But I will say he was a real stickler for earnings. We would create these things called model books that we talked about earlier. And I remember the stock CF. I don't even know if it's still traded. CF, can you try that?
Yeah, I remember that.
That was when like potash was going. Go
There
to
you
the
go.
monthly
Still,
chart.
same group.
Yeah, let's go to the monthly on this one. And when we were putting this in the model book, you put two dates in there. You put it right before it breaks out, and you put it after the top. And you can't see it down there, but it had this perfect cup with handle at the bottom, but it had no earnings, and it was a turnaround. The earnings were, this is a fertilizer stock. The earnings didn't come until it was midway in the move. And that's where he wanted to start the model book, because at that point, he was only trading stocks with earnings. And so he said, I don't want to study the earlier move because I wouldn't even consider it as a stock. So that's a long way of answering the person's question of, if you want to be original orthodox, more power to you. Do that. You're fine. You're going to have plenty of fish, you know, and plenty of stocks to pick from. I'm going to look at reality, and I do this thing for the firm every year. It's called a top stocks book, where we you know, look. It's essentially a model book each of the year of the stocks that had the biggest move. You know, if you can get your hands on one of those or borrow one or what have you, just do your own screening. Look at reality each year and bend with that. And that's his original philosophy, was have an open mind, look at what the market is really doing. And he would always talk about that with the PEs, where all the, you know, the academic people would say, oh, it's got to, you know, have a low PE. And the reality is, when he built the models before I was even born, he found that the PEs weren't even relevant, you know, because the best stocks had high PEs when they started. And then they would have this PE expansion thing, which is a whole, you know, 10-minute conversation.
Yeah, it's interesting. When I was studying all this through the years, I started saying, you know, I'm gonna hammer it down, and I'm gonna have a screen that really kicks out some great earnings, and then I'm gonna make a second screen entirely different with great sales, and I'll put the two together. And yeah, you're so spot on. If you require both, sometimes you'll hit it, but man, there's a lot of stuff you miss. So why not?
Yeah, and look, I learned the hard way, because when this whole sales thing shift happened, I was reluctant to make the shift, because, you know, I was like, no, I'm going to be, you know, it's got to have it, and then you see these stocks just rip up in your face with, and
Yeah.
you've got to be flexible and say, you know what, there's nothing I can do. I can't go back and get that stock that I missed 5 years ago, but I can get the next one.
Right on. Love it.
Speaking of missing them, here, let's take a look at Lennar. Is it too late? It broke out a couple of days ago.
Well, no, yes and no. So if you're swing trading, it's too late, because with swing trading, you've got to be like precise, you know, within a percent and a half, or so, as close as you can get to the pivot. But if you're position trading, you can go there, or you can do what we're doing. We're using the ITB, because that has all of them in there. You're not going to make as much money, but it's, you know, it's kind of a safer way of playing that group. And yeah, you know, speaking of the home builders, the first stock I ever gave Bill was NVR, and it kind of goes back to what we were talking about at the very beginning. If we can pull that one up, of how thin things used to be, and you were talking about the Amex, that when I was trading that in my research days, so in 97 to 99, I would put this alert on this machine called an ILX that, you know, I was only allowed to go up to like 4 times a day. And it was an alert if the stocks, not if the stock traded, if the bid or the ask even moved. It was that liquid that like these things, it was like watching paint dry, but it was this beautiful thing. And what happened is they were smart enough to not split. So now when you look at the home builders, and the reason why I bring up MVR is it's the, you know, it trades real, because lots of people, especially newer people into the into trading, they don't like the high price stocks because they want to buy a bunch of shares. But all of us here who've been doing it for a while, that you want to buy the best stock, and it doesn't matter, if you have to buy an odd lot or some variation of an odd lot. It doesn't matter. It's how many dollars you're putting into it and the percent of your account that it is. But yeah, go back to 1999 on that one, since we've got it up. And this is what, and this is why I'm always, and let's go to the weekly, why I'm always a stickler with the thing, compressing the charts or not. So yeah, it was out of that base, and must have been, maybe it was the 97. No, it couldn't have been the 97 base. So it must have been in the, it was in the June 98, that little cup there that it formed, up a little higher, that, what, I'll have to look, because I have the charts. But anyways, I shared it with him. He's like, this is dead right. And it was the only one that I didn't put that scrunchy thing where it stretched out the charts on it. So, but this trades real. Let's go back to the current chart for something relevant with this. So the moral of this story is, when you're looking at the home builders and you want to know what's really going on, pull up NVR, because that's the reality. So this one is still underneath the 200 days, so it's still a little bit weak. So you'll know that this group is for real if it can move back above that, above that line and above the 36.19.
Yeah, it's funny you say this, because, you get the blue book and the green book, and the back of the green book had the Amex stocks. And I think I mentioned Lynch Group, LGL. I don't think they're in business anymore. The average daily volume on that stock was 600 shares a day. But you could buy it at the pivot. The thing would go up like 6-8 points in 10 minutes. And it wasn't it was like a $30 stock. It was a lot of fun.
Yeah, and in back when Bill was trading like Pick and Save and Price Company, if you look at those, they were really, really thin. So we'd have to buy them over. That's where I think he got into the habit of buying them over weeks and months, when he would do that strategy, simply because, the volume couldn't handle his size.
Sure. Do we have another one on, or?
Yeah, Paul asks, what are your thoughts on taking gains at 20 to 25% profit versus holding out for potentially bigger moves?
Yeah, that's something you want to do on a regular basis, is take your profits, whether, you're swing trading, you take them really early, or your position trading, you want to lock those in, because one of the things that happens to me that I try to fight against is every stock I'm in, I think is going to be the next huge winner. And so I'm many times reluctant to take off the gains on the way up. But you have to force yourself into doing that. And, that's just has got to be a thing. Maybe you put a limit order in, you buy a stock at $100. Let's just say you buy 100 shares at $100, put a limit order in to sell at 120 and sell 50% of your shares, and just leave it there. Just like you could put a stop order in at $97 to make sure that you're out of it if you get cut your loss at 7%.
Awesome. Yeah.
Got a couple of questions on pyramiding. Where's the ideal place to pyramid? At what points do you pyramid? Do you ever pyramid based on moving averages?
All over. The pyramiding is the thing that you will work on the rest of your life and still not have it down, to do it right. And one of the last important conversations I had with Bill was about pyramiding and how I could never get it right the way he would. And he is the best at that. And to take a very long conversation, boil it down, is he would do it over time, little baby increments. And I always saw him buy on up days. I never saw him buy on down days. I always like to repeat that because it is important. Although I will buy on a down day if it's an upside reversal closing near the highs. But, and he would build it slowly, and he was always looking at the cushion, the difference between where the stock was trading and where his average cost is. And he would sell as well. It wasn't just a one direction where you're just buying, buying, buying and never selling. You trim some back, and the way he would have the accounting department do things is not necessarily last in, first out, LIFO, but it was highest price shares, which typically was LIFO. And so he would sell, let's say he started buying a stock at 100 and he's still buying it at 150, and then it starts coming down to 130. He would sell off the shares that he bought at 145, 140, and then keep the cushion. And he was a master at that. And then also knowing when the stock is just wrong and throwing in the towel. And when you pyramid, you have to guard yourself off against falling in love with the stock, right, Pat? You know what I'm talking about.
Yeah.
You want to get it when you want to get a tattoo of the stock on your arm. You should just sell that thing, right?
Amen. Yeah.
Yeah.
It's so never, man, I learned this a long time ago. Never argue with price. It's price, opinions don't pay. We both know price pays.
Yeah, that's for sure. And look, I can love a stock, but and it goes back to seeing Bill in 2000 with Corning. And I always talk about this, is he loved that stock. He would talk about it every day as much as I talk about certain stocks. And then when it just started acting wrong, boom, he's out of that,
Wisdom.
Any last final questions or?
Yeah, we're coming up on 2 hours. So.
Okay.
Oh boy.
I can do it, but I know other people are like, shoot, I need to go to sleep, right? Like, I still got to go to dinner.
Hey, it's like the movie The Big Chill. I got something for that, but go ahead.
Well, this is a good question to end on. We all have this problem, right? One of the struggles I've seen is a stock breaks out before it comes on my radar or comes up on my screen. It's too late to get in because it's already moved. What advice do you have to getting in earlier and capturing those gains?
Okay, well, that's a really good question. And that's why you screen a lot and every day. I mean, the reality is, I do this little show on at the company, and the moment that I'm done with that, which is about 8 o'clock, I'm screening hundreds and hundreds of stocks because I don't want to miss anything. And then I'm screening after the close and before the market, and you not so much before the market as I used to, tons on the weekend. That's one aspect, right? But there's still going to be ones that you miss. There was one that I missed yesterday. It was CT, I don't know, CT something, L or something. Did you see the one that, hold on, it broke out, and it just really made me mad that for some reason I had missed it. I'll find it here while we're talking. Okay. But I'm sure your audience knows what I'm talking about, but there is still going to be, no matter what, CL, TL, and CLT, or C, I'm sorry, dyslexic today, CTLT.
Thank you.
And so I had missed this one. I was kicking myself. I'm like, how did, I had this beautiful move. And so no matter how much work you do, you're still going to miss things. So then you ask yourself, how extended is that stock? So it's not that far out of there. So it's 83 on an 80 stock. So you say, okay, I can't swing trade this stock right now because swing trading, I would have had to get it at 81. It's at 83.53. So I'm going to go ahead and buy it. I didn't buy it, but if you wanted to, you can go ahead and buy it, but I'm going to dial back my position size on it. So if I normally buy 10%, maybe I buy 5% or 2.5%, because there's this thing that we talked about David Ryan earlier, and he said that this thing at the Masters in December that I thought was really good is there's that stock that just keeps running up, and it just eats at your soul every day because you're like, why am I not in, fill in the blank. We all have that stock, right? What stock is yours, Pat? That
Oh man,
you have it. Owen?
Oh
yeah.
Easy.
I want more Apple. I'm in Apple, but I want more Apple. And I keep looking for.
That's a wimpy answer. You can't say you want more something you already have. Like there's something that's up there, you know it. Okay, you'll remember it after the show. So you know, and Dave said, you know, there's this mental health buy that sometimes you just have to buy some of it.
Yep.
And to alleviate that pressure of that, you're always protecting your mind, right? Because we're not algos, we're all humans. Everyone here listening, you're all human. You're not sitting here listening to this old fat dude ramble on for 2 hours if you're not trying to get some sort of edge in the market. So we're human. We're fighting this. We're trying to, you know, keep our emotions in check. So just buy a little of that Fastly that's sticking straight up in the air that you're afraid that it's going to keep going, or, you know, a Tesla or a Livongo or what have you, that's way up there. But just buy so little that it's not going to, you know, it's not going to hurt you if it goes down. So if you have $100,000 that you're playing with, maybe buy $500 worth. It's nothing. That thing can double or triple and it's not going to impact you. It could go to zero and it's not going to impact you. Yeah. That will help with the just kicking yourself for I missed the stock. But then once you have it on your sheet and you have a tiny little position in it, then you can look for the right entry points to get in. And you might buy it and then 2 days later you sell it, even at a tiny gain or a tiny loss. But it's more of your mental health that you're trying to save, of not kicking your, you know, of not kicking yourself every day. Oh, GSX, that's a classic example. Okay, so that one I bought. Well, I traded it a few different times, but recently, as it built that little shelf above 50, around 52 or so, I bought it, and then the next day it gapped down on something. First thing in the morning, I sold it within the first minute of the trading day, and that's fine. And I took it off my radar. The next day it gapped up, and typically I'd go back in, but it being a Chinese stock, which carries the extra risk, I said, no, I'm not going to play that one. And it finally went up, and every day I'm like, wow, that was really stupid, Mike. You know, I should have just bought it back. So a couple days ago, on that upside reversal, or was it yesterday? I think I bought some for just a little bit, you know, I'm like, okay, it's coming in, and then like a half an hour, I'm like, Mike, what are you doing? That's just stupid. And so I blew it out, but it made me feel better, you know. And sometimes you have to do that. It's just the truth, you know, that you have to protect your psyche. And that is really important. And those people who want to just say, you know, be rigid, if that works for you, good for you. But sometimes you have to bend things just a little bit just to, you know, stay even keeled with things. And so to go back to their question, the other thing that I saw with Bill when we would do those Sunday night calls, and it wasn't just Sunday, it was all throughout the week too, but the bulk of it was on the Sundays. If we missed a stock, he, you know, and it looked like a true leader, he would just put it on our list. He'd say, you know what, we missed it, and the worst sin you can do is missing a true market leader, as people like to call them. We call them model book stocks, and in not having part of it. So sometimes we would just add it extended. And what we would do is there's these things called ants that we use, where if a stock is up 12 out of 15 days, and then it pulls back in, and it pulls back in for 2 or 3 days, and then comes up, that's a very risky entry point that you can do. But if it's a powerful enough stock, it's kind of like a mini high tide flag type of formation. You can buy it, and you're using your recent lows as a stop. I hope that made sense.
This is great. Should we wrap it up? Is that good?
I think so.
Unless anyone has one burning trick question.
Well, we could break for dinner and come back. There's about 80 questions, 80 messages out there, Mike. I don't know.
Okay. Well, hey, have me back in a couple months. I'll be rested up after my vacay.
I wanted to, Michael, I just, from my heart.
Don't call me Michael, and we'll be good. I'll come back.
Okay, Mr. Webster?
No, you can call me Webby. You can call me the dude. You can call me Mike. Don't call me Michael.
Here's the scoop, buddy. You got a dictionary.
Dude, Pat, I'm messing with you, man.
You got a dictionary named after you. The only thing I got named after me was a muffler, okay? I mean...
Well, you got Skywalker. You got Luke.
That's true.
Skywalker.
There's a story that goes with that for another time, let me tell you.
Okay.
No, thank you. I really appreciate it, though, Mike, that you came here. and that you just shared three things: knowledge, wisdom, and humility. And laying it out that it's like everybody thinks, oh, this is really easy. No, it's a lot of hard work. I mean, I'm listening to you and you're talking about, you're an extremely successful guy doing this. You look at a ton of stocks. There's no substitute for seat time, studying them and managing them. But I appreciate what you shared, not just intelligence, knowledge, you shared some wisdom with us. So I think on behalf of everybody, thank you very much. I really appreciate it, bud.
Thanks, guys. That was
Thank you
nice.
very
I
much.
appreciate that. All right, so I'll be all rested up after my vacay, and I'll come back and we'll tackle those other 80 in August.
Let's go here. Tell you what, come to St. Louis. We'll turn it up a notch, okay?
Okay. See you guys, man. Take it easy.
Thanks again. Happy birthday to your mom.
Okay, will do.
Thank
Bye-bye.
you.
Thank you.